Hey everybody, this is Jim at SP500chart.com. I'm coming to you from a hotel room in Soho in New York City, and weather here is beautiful. It's weird. I left Atlanta and it's cold and rainy, and now I'm in New York City and it's really warm and sunny. But hey, I don't have my little opening title page, but let me tell you or remind you that this video and the website SP500chart.com are for educational purposes only, and nothing stated either in this video or at the website is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy that draws lines on charts. And we're going to make this brief because I've tested the upload speed on my internet connection here, and it ain't nothing to write home about, as I would say in Atlanta. So look here. Here's the deal, guys. This little resistance line that we put in place yesterday played resistance today again. So this is the line that bulls need to get over. If the bulls can take it over this line, then there should be a move up to at least the mid 1670s and probably even up into the 1680s. You can see where the different trend lines that we've had on our chart for the past 2 or 3 days are still having some influence. You can see we had that swoon kind of late in the day, and it bounced right at about that line, and then we came back and we came right back up to this resistance line. Then we fell back down and ended the day once again. How many days is this that we're ending right at these little trend lines on the 10-minute chart? Well, we've ended at yet another one, and as the situation has been time and time again, we're dealing with very small time frames. We're dealing with very small moves, really, and because we're dealing with these small moves, it's hard to distinguish noise from the real underlying trend. And well, you might hear some sirens in the background. So anyway, let's just say this: the trend lines that are on this chart are still the same things that I think we need to keep our eyes on. We need to keep our eyes on this. If the S&P can break through this, there would actually be a little bit higher target now because we've had a little bit more of a dip. We take this midday dip right here, or early afternoon dip, that now becomes the depth of what has taken place underneath this trend line. So whenever we break out over this, if we break out over this, I think mid 1670s are implied just from the past 3 or 4 days of trading. And again, these descending lines seem to still be active and doing something to help guide the market, but obviously they're descending. So you know, it's not too exciting. They're only going down what about 4 or 5 points a day. So guys, that's really about all I got. You know, we've got support down here around 1628. If the wheels come off in the next day or so, and we end up, you know, selling off, you know, 1.2, 1.3% or something like that, then I would be looking for this line to probably produce a bounce. So if we do continue this selling, then I would look for this line to be some help in offering some support. But right now, this is the line that the bulls need to bust through. The fact that we are trading over the top of this resistance line that worked for 3 days, you might say, yeah, but we were underneath it today, but when we got underneath it and tag this bottom line, there was a quick rally back out of that, out of this descending channel, which is very narrow, and that's when we tagged that resistance line up here again. Then we had the sell-off. So guys, that's your video for August 21st, 2013. I appreciate you taking time out of your day to watch it. Take care.